of the show. Joining me is Sandeep Bagla of Trust Mutual Fund. Sandeep, good afternoon. Great day for the markets. And Nifty has seen one of the biggest single-day rises in the last couple of years. So finally, now that the overhang is done, can we say that we can see a good run-up ahead? What's your advice?
Yeah, I think volatility will be there in the markets, both because of global and local factors. But this is something which the market was looking forward to, and people had sort of, given up hope that for the next 3 to 6 months this might take for the deal to fructify. So this announcement is, I think, more than just welcome. And in the process of negotiating this deal, we have also come closer to a deal with the European Union. So, in troubled times, there are more reforms. And I think that has proven true this time also. So additionally, I think we have got the benefit of more favorable transactions from the EU also. So I am quite hopeful that this will boost sentiment also, this will boost the rupee also, and this will provide some further tailwinds to the market, which were missing till this time.
Okay, got it. Sandeep, but the labor-intensive sectors, for instance, your textile, shrimp stocks, they've all hit 20% upper circuit at this point of time. Do you think that this rally is sustainable going ahead from a fundamental perspective, and would you advise investors to relook at them?
See, I think what happens is if the tailwinds are behind you and if the policy is in your favor, then people have more patience to hold on. And, even at higher PE, if you have greater visibility, people are okay to hold on to stocks. So while, the current price rally may or may not sustain, but I think it definitely gives investors to hold on to for a longer period of time. And if the earnings were to revive in the next couple of quarters, I think the prices would sustain as well.
Okay. But what does it mean?
Of course, this is meant more from an institutional investor framework. Individuals are not expected to, really trade in the markets actively, but, give money to us fund managers to manage more responsibly and more actively.
Got it. But, everyone has been saying that the FIs would come back with the kind of, the US trade deal now that it's done deal, and we also have the uncertainty of budget also out. What's your thoughts in terms of the capital flows when it comes to the Indian markets?
See, I really hope that, FIIs come back and, probably in the short term, there would be a short covering. But, for sustainable flows, I think India has to become slightly cheaper, either in terms of currency or in terms of equity valuations, because most of the incremental investments are coming in emerging markets, which are probably more AI driven in terms of hardware or software. But in the past, even the other EMs have got money and India has not. So hopefully India will also get some money. But I think the valuations would probably have to come down a bit more for FIs to come on a sustainable and on a larger basis. So I would wait for some more data to emerge. Today, I think, of course, I think FPI data should be positive. But I don't think that this is sufficient for FPIs to turn beyond the short covering.
Okay. But the tariffs on steel and aluminium continue, Sandeep. Would you advise investors to warrant some caution given the kind of rise that we're seeing in the Nifty Metal Index?
See, I think the metals have seen some kind of a sharp correction. And, one important factor in my mind is the announcement that the US Fed will have Kevin Walsh as the next US Fed governor, the chairman of the governors. And I think he's a person who's basically not very in favor of balance sheet expansion. And he's a bit of an inflation hawk also. So I think under that, there could be expectations that dollar will become somewhat stronger. So that could provide some kind of headwind for the metals in the short run. Over a medium term, I think metals should do well because I think inflation is a worry on a global platform. And in the global scenario, I think inflation can go up. So I think one should be cautious on metals, but I think long-term bullishness could persist.
Okay, got it. But Sandeep, any sectors that you're turning positive on now that the overhang of the trade deal is out now?
So we are fairly bullish or constructive, I would say, on financials and on banks, NBFCs, and capital markets. Then we are getting constructive on autos, which includes passenger vehicles and CVs, and of course auto anchors also. We have added to export-oriented companies in the last few days in our portfolio. So incrementally, yes, the markets would probably be beneficial for companies which are linked directly to exports. But we are more domestically focused. We believe the Indian growth story will continue for a long time to come. So we are likely to have more stocks in our portfolio which are domestically focused. So I think we are likely to benefit from the improvement in sentiment rather than just the benefit from accruing from the trade deal.
Okay, got it. Sandeep, let's circle back to the defense counters because they did see quite a bit of an increase in allocation during the budget. But with the kind of valuations they have been trading and execution still remaining a key overhang, do you still find it attractive from a growth story perspective?
So defense, we feel is that it's a multi-decadal opportunity, and the growth will continue as India transitions from a complete defense importer to probably a net exporter over the next decade. But valuations are steep and earnings are lumpy and are likely to happen over a period of time. See, defense is a more risky sector, especially for the retail investor. We have some allocation to selective stocks, and we probably will have them for a long period of time. So we are bullish on defense, but one has to be patient. And as you rightly pointed out, valuations are challenging.
Okay, got it. What about the gold and silver prices? I mean, they have remained quite a bit turbulent. Today, we have seen a little bit of a retreat in both of these bullions, and as a result of which ETFs have also rebounded. But what is the kind of sentiment are you assessing here? And if there is an investor who wants to relook at it, what would your advice be here?
See, my perspective on this is that investors should not try to participate in everything which moves fast. I think there is merit in committing 10 to 15% to gold and silver, mostly gold and less silver, which is more speculative in a portfolio. There are a lot of speculative elements which are going on. There are a lot of technical factors which are governing the markets, leading to wild volatility. So I think one should not really try to look at it from a daily perspective and try to trade on it. I think on a trend basis, gold and silver will do well. However, if the dollar were to strengthen in the interim, there could be corrections. I think there'll be wild swings. So I think one should definitely put some allocation depending on the risk appetite, but one should not try to chase any market correction or chase any rally and trade in a big way.
Okay, Sandeep, what about the small caps? I mean, you can see majority of the stocks, be it your textiles or the shrimp companies, they fall into the small cap category. Now that the trade deal overhang is out, would you say that the frothiness in the small cap segment has, definitely turned a little bit more attractive at this point of time? And would the investors actually care to relook at it despite, the kind of outperformance that we're seeing in the large caps?
So, at Trust Mutual Fund, we are getting identified as a house which tends to believe in the long-term sustainability of small caps. See, small caps are, there are more than 1,000 companies probably which are more than 2,000 crores in market cap. So small caps forms a very large universe of 700, 800 investable companies. And we feel that the earning growth in select small caps will be much higher than even mid caps and definitely more than large caps in the next couple of years. And the mid caps of tomorrow will come probably from the small caps only. So I think there is a lot of opportunity, but it's a treacherous terrain out there. Small caps tend to go down also very severely when there is a disappointment in earnings. There are governance issues also. So I would, I would say that the better way to play the small cap over a long period of time is to invest in a fund which has specialized fund managers. I think the next 5, 10 years, small caps will outperform and outperform handsomely. But it has to be done under expert supervision, and one should not try to, play large stakes on an individual basis on small caps. So I think a diversified portfolio with small weightages in small cap portfolio will do you well.
Okay, got it. Sandeep, what about the rupee? I mean, today clearly we are seeing that the local currency has appreciated by 1%, closed at about 90.1 against the US dollar. Do you think this kind of move is sustainable going ahead from the currency point of view?
See, I think the Indian currency has done exceptionally poorly against the dollar and against other currencies. So I think probably would be reasonable to say that we should not see too much depreciation during the year. But it is only February, so there's a lot of time till the end of the year, and I think the volatility will be there. But I don't see any great amount of depreciation this year beyond what we have already seen in January.
Okay, got it. But yes, I mean, Sandeep, during the budget, the STT hike on the FNO definitely spooked the market sentiment. But today we're seeing a bit of revival on the back of the trade deal. But the sentiment has been that it could squeeze in the liquidity and in the derivatives market. What's your assessment here in terms of the hike in the derivatives market?
So I think the hike in STT has been undertaken with the objective that one should try to curb the speculation in futures and options market, especially from the retail. It can lead to marginal reduction in liquidity, but I think there has been a concern that retail investors are indulging in too much speculation, and of course there has been cases like Jane Street where there has been systemic large amount of trades. So I think this has been done to reduce speculation. I think time will tell. I don't think the liquidity will come down to that extent, and probably speculation will be curbed to some extent.
But what does it mean for high frequency traders who have been, using the algorithms to trade day in, day out? What does this tax increase mean for them? Do you expect a transition to low frequency?
Frankly, we are long-term investors. We want to gain from the India growth story. People have tried to use stock markets for their gains by doing high-frequency trading. But, in the bigger scheme of things, I don't think it really matters.
Okay, got it. Sandeep, now that the trade deal is announced and we even have the budget and the Q3 results are also, already almost towards the last leg, what is the next trigger that you're watching out for?
See, I think the trigger, would be the global markets. I think we are seeing green shoots. I think we are seeing green shoots even in the CV cycle, which is an indicator of the overall health of the economy in the next few quarters. So I am more optimistic than earlier. I was a little concerned earlier about the trade deal and about the slowing growth in Indian economy and the higher valuations. I think all those factors are much better off in terms of an investor making fresh investments. I think 2026 should be seen as a year to make investments. It will give you very good opportunities to invest, and one possible opportunity was, a couple of days back. I think this is not the year to really, count your returns. I still think the returns are going to be fairly reasonable this year. But I think I'm far more optimistic on India's future going forward after the budget and after the trade deal.
Okay, any targets on the Nifty 50 that you're penciling in at this point of time?
No, absolutely not.
Okay, got it. Sandeep, also we'll be having RBI, which will be meeting this week itself for its MPC announcement. What is the kind of announcement that you're expecting? Is there going to be a rate cut or not? Which campaign are you leaning towards?
No, I think there's no chance of any rate cut or any kind of cuts right now. I think the MPC members will have a lot to chew on in terms of the developments in the past few days and the volatilities. I think one thing that requires immediate attention is the high short-end rates. The largest bank in India was borrowing at 1 year money at 6.20 a few months back. They are now raising money at 7+ levels. So in spite of rate cuts, the bank borrowing costs have actually gone up substantially. And I think that is concerning because that means that not only the transmission is not happening, but it's actually the rates are moving the other way around. And it will not only lead to compression in banks' earnings, but it has more implications on the liquidity framework and also the inflationary expectations of India. So I think one needs some clarification from RBI as to why their policies are not really working in the real world. And I think the economy and the market participants should have an explanation from RBI as to what is their thought process going forward.
Got it.